More than 2,000 companies have reported their Q3 earnings. Some delivered strong results, while some disappointed. But are good results alone enough for us to make a decision? No. Because one strong quarter can come from base effects, pricing, or one-time factors. What we as investors need to look at is growth that is repeatable and backed by numbers. So we did the hard work. We filtered companies that delivered one of the strongest Q3 FY26 performances in the market, along with strong fundamentals. Strong sales growth, strong profit growth, improving margins, healthy EPS expansion, and reasonable valuations. And what we got is 10 companies. Hi, I'm Aparna, and in today's video, we are breaking down 10 stocks that delivered good results and look solid fundamentally. I'll walk you through each of these one by one, analyze it with you so you know why these made it to our list. Also, at the end of this video, I'll show you the exact search query behind this list, something you can use to find stocks with strong fundamental triggers early on. So stay with me till the end. Let's get started with stock number 10 on our list, Aether Industries. It operates in specialty chemicals, which are basically customized, high-value chemical products made for specific customers. What really makes it interesting is how its business mix is now changing. Earlier, a large part of revenue came from large-scale manufacturing, which is usually lower margin. But today, more than 50% of revenue comes from CRAMS or contract research and manufacturing services and exclusive manufacturing, which are higher margin and more predictable. That shift showed clearly in Q3 FY26. Revenue came in at 317 crore, which is up 44% year-on-year. But EBITDA grew up much faster, which is up 75% with margins expanding to 35%. The next big growth driver is new capacity. 2 new plants will start production from March 2026, and FY27 is when these plants start getting used properly, and that's when profits can really accelerate. But yes, there are risks. Working capital is around 160 days, meaning cash comes back only after several months, and chemical pricing is volatile globally. But structurally, Aether is moving toward long-term and high-margin contracts, which improves earning quality over time. Okay, now let's move on to stock number 9 on our list, Syrma SGS Technologies. It's emerging as one of India's most diversified EMS players. It basically manufactures electronic systems for multiple industries like auto, healthcare, railways, and defense without selling under its own brand. The strategy has been clear: scale exports, improve product mix, and move into higher value segments like defense and PCBs. Q3 shows that this strategy is working. Revenue grew 43% year-on-year to 1,275 crore. EBITDA more than doubled, up 100% with margins expanding to 12.6%. PAT also doubled to 110 crore. The next step is making more things in-house, especially PCBs. The approvals are done and the money has already been invested. Over time, this should help the company earn better margins. Execution is still the key thing to watch here. But with an order book of 6,400 crore, revenue visibility in the near term is strong. Now let's move on to stock number 8 on our list, Acutaas Chemicals, which was formerly known as Ami Organics. Earlier, the company mainly made chemical ingredients used by pharma companies to make medicines. Now it's moving beyond that into more complex customized products, also called CDMO. Here margins are higher and customer relationships are stronger. And the Q3 numbers reflect that shift. Revenue grew 43% year-on-year to 393 crore. EBITDA more than doubled to 151 crore. PAT crossed 100 crore for the first time at 106 crore rupees. The main driver was CDMO. Because these products are tailor-made and harder to replace, they typically come with better margins and more stable demand. Management has already validated 4 new CDMO products which are expected to contribute from FY27. The company is targeting 1,000 crore CDMO revenue by FY28. Beyond pharma, battery chemicals and semiconductor chemicals are coming online from FY27. But yes, there are still risks to watch. Revenue is currently concentrated in oncology-related CDMO products, and execution will matter as battery and semiconductor businesses scale. Okay, now let's move on to stock number 7 on our list, Garden Reach Shipbuilders or GRSE. It is one of India's key defense shipyards under the Ministry of Defense. Q3 was a strong execution quarter. Revenue grew 49% year-on-year to 1,896 crore rupees. EBITDA rose 59% and PAT jumped 74% to 171 crore. Earnings per share moved from 8.57 rupees to 14.91 rupees. This kind of growth shows operating leverage as defense projects move into advanced stages. GRSE has delivered 5 warships this year and is executing 10 major shipbuilding projects comprising 42 platforms. The next big trigger is new orders. Management expects the order book to grow to around 50,000 crore rupees as new defense contracts come in. The main risks are execution delays and margins cooling from current highs. Even so, GRSE is clearly in a strong growth phase within India's defense spending cycle. Next on the list is stock number 6, which is Kalyan Jewelers. Kalyan is one of India's largest organized jewelry retailers with 318 stores in India, 38 in the Middle East, and 110 Candier stores across 7 countries. The brand focuses on trust and transparency with a strong local presence and now holds about 7% of the organized jewelry market. Q3 was strong. Revenue grew 42% year-on-year, PAT almost doubled, up 90%. India business alone delivered 9,048 crore rupees. Margins improved due to a better product mix and smarter sourcing. The bigger long-term driver is its franchisee model. Today, 195 stores are run through franchises and 84 more are planned. This lets the company grow fast without putting too much money on its own balance sheet. Returns on capital are strong at around 28%. But yes, risks remain. Gold prices can move sharply and competition is increasing. But for now, execution is strong. Okay, now let's move on to stock number 5 on our list, Waaree Energies. Waaree is India's largest solar module manufacturer with 28 gigawatt capacity. Q3 FY26 numbers were massive. Revenue grew 119% year-on-year. EBITDA rose 167% with margins at 25.5%. And even PAT grew 118% to 1,106 crore. The company became the first Indian firm to hit 1 gigawatt monthly module production and added 5.3 gigawatt of fresh orders. Beyond solar modules, the company is also moving into battery energy storage systems and electrolyzers. These are early-stage businesses today, but they give Waaree exposure to future areas of clean energy, creating long-term growth visibility. The risks are clear. The company is undertaking a very large capex plan which brings execution risk. Margins can fluctuate because raw material prices are volatile and higher debt levels need to be watched closely. That said, Waaree remains one of the key beneficiaries of India's clean energy transition given its scale, capacity and strong order flow. Now let's move on to stock number 4 on our list, Solar Industries. It is India's largest explosive manufacturer and an increasingly important defense supplier. Its products are used both in mining and in defense applications, which gives its exposure to 2 large capex-driven sectors. Q3 was a standout quarter. Revenue grew 29% to 2,548 crore. EBITDA increased 37% and margins improved to 28.8%. The biggest highlight was defense, where revenue jumped 72%, showing strong execution and delivery momentum. The defense order book now stands at around 18,000 crore rupees, while total orders are close to 21,000 crore rupees. This gives the company clear visibility for growth over the next few years. Risks obviously remain. Execution delays on defense contracts and swings in mining demand can impact near-term performance. But overall, Solar Industries is well positioned to benefit from India's rising defense spending and infrastructure-led capex cycle. Now let's move on to stock number 3, Hindustan Zinc. They are India's largest zinc producer and one of the top silver producers globally. It is a subsidiary of Vedanta Limited, which holds a majority stake, while the Government of India also remains a key shareholder. It operates large mines and smelters and is known for its low-cost production model. Hindustan Zinc delivered a record quarter. Revenue came in at 10,980 crore, up 27% year-on-year, while profit after tax jumped 48% to 3,916 crore. Operating performance was very strong, with EBITDA margins at 55%, reflecting its low-cost operations. The biggest driver this quarter was silver. Silver prices rose 74% year-on-year, and silver now contributes about 44% of the company's total profits, making it a major earnings lever. Going ahead, the company benefits from low production costs and capacity expansion, which support long-term growth. At the same time, profits will move with zinc and silver prices, which remain the key risk. Now let's move on to stock number 2 on our list, which is BEL or Bharat Electronics. It is India's leading defense electronics company. It supplies critical systems like radars, missile electronics, communication, and electronic warfare equipment to the armed forces. BEL grew revenues by 19%, profit by 21%, and margins improved to 30% as more work was done in-house. What gives BEL strong visibility is its order book of 73,450 crore, which supports earnings over the next few years. Key defense programs like LRSAM and Acutaas are already driving execution, while upcoming systems such as QRSAM add to future growth. The main risk is execution. Defense projects can face delays and long timelines, but strong cash and customer advances keep it financially comfortable. Overall, BEL is a steady, order book-driven defense play with long-term visibility. Now it's time for number 1 on our list, Titan Company, which is a leading lifestyle company operating across jewelry, watches, eyewear, along with other segments such as fragrances, women's bag, and ethnic wear. Q3 was a strong quarter for Titan. Revenue grew 40% year-on-year, while profit rose 61%, which was driven mainly by the jewelry business. Jewelry demand was supported by the festive and the wedding season, along with higher gold prices. Gold jewelry and coins made up about 74% of total sales during the quarter. Higher gold prices helped boost revenue in value terms, but they also slowed down the new customer additions as affordability obviously became a concern. Strategically, Titan strengthened its international presence by acquiring a 67% stake in Damas Jewelry, expanding its footprint in global markets. Key risks obviously remain. Gold price volatility can impact demand, and regulatory changes around duties or GST can affect margins. That said, Titan's brand strength, scale, and execution continue to make it one of the strongest consumer companies in India. So these were the 10 stocks that stood out post Q3 earnings. Different sectors, different business models, and different risks. Now, as promised, let me quickly show you how we found these 10 stocks. So we started with a simple but strict filter. First, we kept the market cap above 1,000 crore. This helps avoid very small companies where one good quarter can distort results. Then we looked for strong growth. Sales growth of at least 20% year-on-year and 10% quarter-on-quarter. This is to ensure momentum is real and continuing. Next, we checked profits. Operating profit growth of 20% year-on-year and 10% quarter-on-quarter. And PAT growth of at least 15% year-on-year and 10% quarter-on-quarter. We also ensured earnings per share or EPS growth above 15% year-on-year and quarter-on-quarter above 10%. Finally, we added a valuation check. We kept PEG ratio below 10, not too restrictive, but enough to avoid extreme overvaluation. We also allowed EV by EBITDA up to 50, giving room for high growth companies without letting valuations run wild. When all these filters came together, we were left with these 10 high quality performers. You can run the same query every quarter to spot companies early on. If this video helped you think more clearly about earnings season, do hit like. It really helps us understand what you find useful. And tell us in the comments which of these 10 stocks surprised you the most and why. I'll see you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.